Welcome back, deep divers. Ready for another custom deep dive? Today, we're really getting into the Indian stock market, specifically what happened on August 8th, 2025. As usual, we've got a stack of sources, business news, financial reports, and our mission is to sift through it all for you. We want to pull out those key insights, the real nuggets of knowledge about the day's market moves, and, well, the general feeling out there today. Definitely cautious.
Oh, absolutely. You really felt that bearish sentiment across the board in the Indian share market. It was quite distinct. Just look at the numbers. The Nifty 50 closed at 24,363.30. So that's down 232.85 points, which is 0.95%. Quite a drop.
Stocks and Sun stakes.
Yeah, same story there. It also felt the pressure, closing down 765.47 points at 79,857.79. So that's also a 0.95% decline. Tells you right away this wasn't just one or two things. It was pretty widespread.
Right, 0.95% on both major indices. That really paints a picture. So, okay, let's dig into the why. What were the currents pulling things down? Maybe start with the external stuff. I heard talk about the U.S. increasing tariffs again. How did that play out?
Well, it's interesting, isn't it? How quickly those global ripples hit home.
Yeah.
The U.S. tariff hike, yeah, that directly hit investor confidence.
Yeah.
Why? Because it raises concerns about Indian exports, right?
Exports taking a potential hit.
Exactly. And when exports might suffer, you start worrying about company revenues, especially for those big exporters. That raises questions about earnings, the broader economic outlook, and investors, well, they tend to get cautious, pull back a bit.
Okay, so that sets a cautious global tone. But then internally, what was happening with money flow? We saw this pattern, didn't we? Foreign investors selling off. Again, I think the sources said it was the 14th day straight. They pulled out, what, nearly $50 billion? About $571 million.
Yeah, 49.97 billion to be precise. And yes, the 14th consecutive day of FII selling.
What does that signal when it goes on for so long? 14 days is quite a streak.
It definitely suggests FIIs are maybe looking elsewhere, or perhaps have some specific near-term worries about the Indian market. And this is really crucial. You have to contrast that with what the domestic players were doing.
DIIs.
Right, exactly. Domestic institutional investors showed incredibly strong buying, like really strong. They put in 108.64 billion. That was actually the highest DII buying figure we've seen in 4 months.
Wow, highest in 4 months, while FIIs are selling for 14 days straight.
Precisely. That push and pull, that dynamic between foreign selling and strong domestic buying, it's really significant.
What does it tell us? That locals are more confident?
It suggests that, yeah, while foreign capital might be wary, domestic investors seem to have this deeper conviction, perhaps. Maybe it's faith in the long-term growth story, government policies, or just steady flows into local mutual funds. Whatever the reason, they acted as a really important counterweight today.
That's a fascinating counter-narrative playing out. Keeps things from maybe falling further.
Could well be.
But thinking about the pressure, where was it felt most acutely? Which sectors really bore the brunt? We mentioned IT and Pharma were down maybe 0.9% and 0.7%. Was it mostly contained there?
Well, they definitely took a hit, IT and Pharma. But no, it wasn't just them. Not at all. The downturn was much broader. Actually, 13 out of the 16 main sectors were under pressure.
13 out of 16. Okay, so pretty systemic then.
Definitely. You saw weakness in heavyweights like auto, metal, infrastructure. It really emphasizes that this wasn't isolated. It was more of a general lack of buying appetite, a sort of broad retreat across the market.
Right, a broad retreat. But even on days like this, there are usually some stocks moving against the tide or some really dragging things down. Any specific names that were, at the heart of the action? Gainers or losers?
Absolutely. Even in a sea of red, you find some green. AU Small Finance Bank, for example, it gained about 2%. Why? Well, the RBI gave it approval to become a universal bank.
So big news for them. Opens up possibilities.
Huge possibilities. Signals major growth potential, so the stock reacted positively. And LIC, too, Life Insurance Corporation, it was up around 3.5%. That seemed tied to strong profit growth reported in their Q1 results. Good company-specific news cutting through the noise.
Okay, so specific positive news could lift a stock even on a down day. But what about the other side, the big drags? I heard Party Airtel had a rough day.
It did, yeah. Party Airtel dropped quite a bit, somewhere between 3 and 3.5%. Seems like it was driven by some large block trades happening, plus just generally weak sentiment around the stock right now.
And volume was high too, I read.
Yeah, significant surge in volume, suggesting a lot of selling pressure there. And it wasn't just Airtel. Other big names, large cap stocks, also contributed significantly to the indices' fall. Think Tata Motors, M&M, Reliance Industries. RIL.
Right, the heavyweights. When they fall, they pull the whole market down.
Exactly. Their declines have a bigger impact just because of their size in the index.
Yeah.
So yeah, investors were pulling back from those key bellwether stocks too.
Okay, so tough day overall, but you mentioned something earlier that puts it in a bigger context, the weekly trend.
Ah, yes. That's quite striking, actually. This week capped off a 6-day continuous decline for the Indian equity market.
6 straight days down.
6 straight days. And what's really notable is that we haven't seen a losing streak that long since April 2020.
April 2020. Wow, that was a very different time.
Yeah.
Early pandemic uncertainty.
Exactly. It's a rare occurrence. 6 consecutive down days isn't something you see often. It suggests something more than just a few bad sessions. It points towards a potentially deeper undercurrent of caution or fear, or just very persistent selling pressure that's hard to shake off. It makes you ask, what's driving this sustained pullback?
Right, that historical context really adds weight. 6 days.
Yeah.
Longest since April 2020. Okay, so let's try to wrap this up. Key takeaways from this deep dive. We had a market downturn, clearly driven by things like U.S. tariffs adding external pressure, and that persistent, really quite long streak of foreign selling 14 days.
But crucially contrasted by that very strong domestic buying. Highest DII input in 4 months.
Right, that key contrast. And the weakness was widespread. 13 out of 16 sectors hit, especially IT, pharma, auto, metal, infra.
Yeah, broad pressure.
Yet we saw individual stories shine through, like AU Small Finance Bank getting that universal bank nod and LIC with strong profits.
Sure.
While the big names like Party Airtel, Tata Motors, M&M, RIL really weighed things down.
Correct.
And then overarching all of that, this historically significant 6-day losing streak.
Yeah, I think if you connect the dots, it really shows how global factors like tariffs are mixing with these domestic capital flows, the FII selling versus DII buying. Understanding those specific drivers, I think it helps you see beyond just the red numbers on the screen. It shows this complex dynamic, foreign caution, met with domestic confidence. It's shaping the market's path right now.
Which leads us to maybe a final thought for you, our listeners, to mull over. We've got this longest losing streak since the early pandemic days, right? 6 days straight. Yet at the same time, domestic institutions are buying more aggressively than they have in months. So what does that balance, that tension between foreign exit and local confidence? What does it truly imply about the market's resilience? Or where it might be heading next? Something to think about. Thanks for joining us for this deep dive into the market's moves.